Ladies and gentlemen, brace yourselves as the global financial landscape is rocked by unprecedented turmoil. The recent imposition of sweeping tariffs by President Donald Trump has ignited a firestorm in international markets, sending shockwaves through economies worldwide. In a dramatic turn of events, U.S. stock futures have taken a nosedive. The Dow Jones Industrial Average futures plunged over 1,250 points, marking a staggering 3.3% decline. The S&P 500 Nasdaq futures weren't spared either, tumbling 3.7% and 4.6% respectively. This precipitous drop has placed the S&P 500 on the brink of a bear market, a grim indicator of potential economic downturn. The tremors of this financial earthquake have been felt far and wide. Asian markets opened to significant losses, with Japan's Nikkei plummeting 8% at the start of trading. The contagion has spread to other major economies, painting a bleak picture for global financial stability. The energy sector has been dealt a severe blow, with U.S. oil prices falling over 3%, dipping below the $60 per barrel mark for the first time since April 2021. This decline reflects mounting fears that the escalating trade war could thrust the global economy into a recession, dampening demand for energy across the board. Even the cryptocurrency market hasn't been immune to the chaos. Bitcoin, the flagship digital currency, has seen a sharp decline of 5.6%, dropping to $78,736.93. This downturn underscores the pervasive anxiety gripping investors across all asset classes. The catalyst for this market upheaval stems from President Trump's aggressive tariff strategy. The administration has rolled out extensive tariffs targeting imports from China, the European Union, and other nations, with rates as high as 34% on Chinese goods. These measures have prompted swift retaliatory actions, exacerbating fears of an all-out global trade war. Despite the market's adverse reaction, President Trump remains steadfast, describing the tariffs as a beautiful thing to behold. He asserts that these measures are essential to rectify long-standing trade imbalances and bolster domestic industries. However, critics argue that this approach risks plunging the economy into a recession and could erase significant market gains achieved in recent years. Financial analysts are sounding the alarm, warning that the current trajectory could lead to further market declines. Morgan Stanley strategists caution investors to brace for an additional 7% to 8% drop in the S&P 500, emphasizing a need for defensive investment strategies during these turbulent times. As the world watches with bated breath, the unfolding trade tensions and their ramifications on global markets remain a focal point of concern. Investors are advised to stay vigilant, assess their portfolios carefully, and prepare for continued volatility in the days ahead. For more in-depth analysis and the latest updates on this developing story, don't forget to subscribe to our channel. Stay informed and ahead of the curve as we navigate these uncertain times together.